Let's look at key considerations in identifying absorption zones. Firstly, it's understanding the relative speed of your market. Now, when a market is oscillating in a certain range and then it meets a certain price point or a price zone, and all of a sudden the orders start accelerating, but the actual price is not budging and the market's not advancing on the upside or declining on the downside, and the speed of orders that are going through would generally mean that the market would advance or decline, but it's not. Well, those are one of your first key considerations in understanding the relative speed of the market is so important in determining whether there's an iceberg order or not. And also understanding the auctioning rate versus time spent. So, you know, the greater the velocity of the auction, the orders that are being traded through versus the time spent. If it's trading 1,000 lots per minute, and the market isn't advancing, usually 1,000 lots per minute would normally result in the market moving, 3 to 4 to 5 ticks as it takes out the relative average order size on the order book. But now it's not even moving more than 1 tick. Well, therefore already you're observing a potential iceberg in play, and now it's determining how big is that iceberg below the surface. And then also knowing when the counter side has exhausted its ammunition once the speed subsides. So if there is an iceberg order and you trading within it, but also understanding once the iceberg starts, once it really starts exhausting the other side of the market. So if you have an iceberg on the sell side sitting on the offer at 50, and all of a sudden all the buyers are effectively trying to lift the offer, and the iceberg keeps on reloading, then the buyers just start becoming lethargic and they're not being able to buy as aggressively as they did, and then it's now moved from 1,000 lots per minute to 400 lots per minute to 100 lots per minute. Then all of a sudden, once the prices start declining, there'll be that pain threshold point for those people who've lost the battle against the iceberg, when all the orders have to start unraveling. And you'll see that in the videos that we look at. And this is really important, is knowing when the iceberg has effectively won its battle in that specific time frame. Also understanding the seasonal times of days and months. A lot of times you'll get iceberg patterns when the market's highly active and incredibly aggressive, and then it's easy to observe the patterns. And when do those occur? Do they occur, the beginning part of the month when risk is being put on the table, when there's a technical order flow such as month-end trades, regardless of what time. It's just really important to understand the seasonal trends of the various markets, of when certain types of iceberg absorption patterns can occur.